everyone, and welcome back to the Wisdom by Harry YouTube channel. My name is Harry.
And I'm Mary. We're so excited to have you here today for another fascinating episode.
Where we dive deep into all the stuff you need to know.
The headlines.
But maybe don't have time to
really dig in and read all those long articles.
So we're going to do it for you. Today, we're tackling something that is kind of a big deal.
Yeah, front page news everywhere.
Yeah. The trade situation.
Oh, yeah.
With the U.S.
The U.S., China.
China and, well, pretty much everyone.
Everyone else, too. The whole world's kind of watching this one.
Yeah, you put together a pretty comprehensive set of sources on this.
Well, I figured we needed different angles, right?
Yeah.
So we've got, let's see, financial news from Malaysia, business stuff from the UK, the US, some deep policy analysis pieces.
Oh, in that panel discussion transcript.
Oh, yeah, that was a good one.
So our mission today is to synthesize all that, right? To figure out where things stand.
In April 2025.
Yeah, April 2025.
Where you are.
With these trade tensions. What are the tariffs doing? Are things going to escalate even more?
Right, what's the fallout?
Yeah, what does it mean for the global economy?
The big picture.
Yeah.
Exactly.
Okay, so let's get into it. First things first. What is the deal with these new tariffs?
Well, you got to understand the scale of this thing, right?
Sure.
So the U.S. has this minimum 10% tariff.
Right.
That applies to pretty much everyone, most countries. But then for some countries, it gets way higher.
Like how much higher?
Up to around 60% in some cases. But the real story here is China.
Yeah, the numbers I saw in China were
huge.
Yeah.
So they're adding another 34% on top of what was already there.
So what does that actually mean for the total?
Well, depending on the analysis, it could be as high as 125% for some Chinese goods coming into the U.S. And some sources even say cumulatively.
Right.
It could be 145% when you factor in tariffs from earlier this year.
So basically,
it's getting really expensive to bring stuff from China.
And China's not just taking this lying down, are they?
No, no way. They hit back with their own tariff, 34% across the board on U.S. exports. That's, hitting about $143.5 billion in revenue.
Wow. So
it's a real trade war.
It's a real back and forth.
Tit for tat.
Yeah.
Big time.
Now, one thing I thought was interesting was the EU's response.
Oh, yeah.
They're holding off on counter tariffs.
They're playing it smart.
Yeah. What do you think's going on there?
I think they're trying to de-escalate, give negotiation a chance.
Okay.
They've got 4 weeks to see if they can strike a deal with the U.S.
Interesting.
Before things get worse.
So it's not all doom and gloom. I mean, there is this 90-day pause on most new U.S. tariffs.
Well, except for China.
Right, except for China.
That's the key point.
So that's like a little breathing room for everyone else.
It is. For 90 days, anyway.
But it sounds like they've got to make a deal, or those tariffs are back on the table.
That's right. So there's a lot of pressure.
Yeah, a lot of uncertainty.
Absolutely. Everyone's kind of on edge,
All right, so what does all this actually mean for, the global economy? Some of these sources are talking about a recession, a bear market.
Yeah, that's the big question, right? What's the real impact going to be?
Yeah.
And, investors are nervous.
Yeah.
You see it in the stock market, the drop in oil prices.
Right.
They're worried this trade war is going to hurt growth.
And it's not just, gut feeling.
No.
There's actual analysis suggesting things could get really bad.
Oh, yeah. The Yale Budget Lab, for instance.
Okay.
They're predicting that if all these 2025 tariffs stick around, we could see the highest average tariff rate in over a century.
Like that.
We're talking pre-World War II levels. It's a big deal.
Yeah, it's a huge deal. And who ends up feeling the pain the most?
Well, the impact's going to be pretty regressive.
What does that mean?
It means lower income households are going to be hit the hardest.
Right.
The Yale analysis actually breaks it down by income. So for families in the second decile, they're looking at about $1,700 extra per year.
Wow.
Families in the middle, the fifth decile, around $3,000. And the top 10%, they could be paying an extra $8,100 per year.
Just from these tariffs.
If they all stay in place, yeah.
That's a lot of money.
It is. And, that's just the average. It could be even worse for some families.
So what we're saying is everyday stuff could get a lot more expensive for Americans.
Oh, absolutely. Especially things that come from China, like electronics, clothing.
I read something about iPhones potentially getting, way more expensive.
Yeah, one source said an iPhone 16 Pro Max could jump from, $1,199 to over $1,800.
Seriously?
Seriously, because of tariffs. They even said the tariff on the wholesale price alone could be over $600.
That's insane.
It is, and that cost, it's going to get passed down to the consumer.
So it's not just consumers, right? Whole U.S. industries could be affected.
Oh, yeah. You're looking at retailers, the auto industry, especially EVs, and the tech sector. They're all in a tough spot.
Because they rely on China.
Exactly. For manufacturing, for parts, for those rare earth materials.
Which China basically controls.
Yeah, they process about 90% of the world's rare earths.
So is anyone going to benefit from this?
Well, when there's disruption, there's always opportunity, right?
I guess so.
So some emerging economies might benefit. Places like Vietnam, Malaysia, Mexico.
Oh, so
companies might move manufacturing there.
To avoid the tariffs.
Exactly. And then within the U.S., some domestic producers might do well.
Because the competition's more expensive now.
Right.
But U.S. agriculture is going to get hit pretty hard.
No, yeah, they're looking at massive losses.
Because of those retaliatory tariffs from China.
Right, on things like soybeans and pork. We're talking maybe $25 billion in losses just this year.
So what about the big picture, like for the U.S. and China?
Yeah, who comes out on top, right?
We're on bottom, I guess.
Well, some analysts think China's GDP might take a bigger hit than the U.S. GDP. But others argue that China's political system might be better equipped to deal with this kind of shock.
So it's hard to say for sure.
It is. Lots of moving parts.
This whole thing makes me think about currencies, too.
Oh, yeah?
Could countries try to weaken their currencies?
To offset the tariffs?
Yeah, make their exports cheaper.
It's possible. Some are calling it a currency war.
What does that even mean?
Well, say Malaysia decides to let their currency, the ringgit, weaken.
Okay.
Suddenly, their exports look a lot cheaper to anyone paying in U.S. dollars.
Right.
So it could help offset those tariffs.
Well, that can't be good for Malaysia in the long run, right?
There are definitely downsides.
Like what?
Well, it makes imports more expensive.
So everything they buy from other countries costs more.
Exactly. And investors might get spooked.
And pull their money out.
Yeah, which can really hurt the economy.
So it's a risky move.
Very risky.
What about China? Are they doing anything with their currency?
There's speculation that they might let the renminbi weaken a bit.
Against the dollar.
Yeah, to try and soften the blow from these tariffs.
Haven't they done that before?
They did back in 2018. But this time the tariffs are way bigger.
So it might not be as effective.
Right.
Have we ever seen anything like this before? Where a country messes with its currency and it backfires?
Oh yeah, the Plaza Accord back in '85.
What happened there?
Well, they wanted to weaken the US dollar.
Okay.
But it ended up making the Japanese yen way stronger.
Oh no.
And that hurt Japanese exports, forced companies to move production overseas.
And that caused problems for Japan.
Big problems. Their economy stagnated for years.
So it's a cautionary tale.
For sure. You gotta be careful with these big economic moves.
It feels like this whole trade war is just part of something bigger.
Yeah.
Like a power struggle.
Absolutely. This isn't just about trade deficits.
Right.
This is about who runs the world.
Like the U.S. or China.
Exactly. Who sets the rules? Who has the most influence?
And they seem to be taking very different approaches.
Yeah. One source called the U.S. approach chaotic.
Really?
And China's more authoritarian.
But more prepared, maybe?
That's what some people are saying.
China's trying to look like the stable one.
The reliable partner.
Right.
Especially compared to the U.S.
And all these other countries are caught in the middle.
Yeah, trying to figure out how to survive.
The EU's trying to be diplomatic.
They're walking a tightrope.
And what about Malaysia? They've got a lot at stake.
Oh, yeah. They're in a tough spot.
Yeah.
China's their biggest trading partner overall.
Right.
But their manufacturing sector,
especially electronics,
relies heavily on the U.S.
So they need both?
They do. And they're a major player in the semiconductor market.
So they're really exposed.
Very exposed.
And China's looking to make new friends, right?
Oh, yeah. They're focusing on the global south.
What's that?
Developing economies in Asia, Africa, Latin America.
Okay.
They're looking for new markets.
To replace the U.S.
Potentially. And, you know, there's a sense in Beijing that they're feeling pretty confident.
I think
they can handle this.
But some people think the U.S. is shooting itself in the foot.
With these tariffs.
Yeah. Hurting its own alliances.
Right. They're saying it could backfire.
By alienating the very countries they need to, push back against China.
Exactly. It's a long game.
So what are the chances of an actual trade deal?
Between the U.S. and China?
Yeah.
Tough to say. I mean, President Trump likes to make deals.
That's true.
But the rhetoric's pretty heated right now.
Yeah, and they disagree on a lot of fundamental stuff.
Yeah, especially on technology.
That seems like a non-starter.
It does. Both sides want to be the leader in AI, in advanced manufacturing.
So a big grand bargain on tech is probably not happening.
Probably not. Smaller deals might be possible, though.
Like what?
Remember that whole thing with TikTok?
Oh, yeah.
Something like that. More focused, less ambitious.
Okay. But haven't we tried this before? To make a deal, I mean?
We have, and there are some recurring sticking points.
Like what?
China's subsidies for state-owned enterprises.
Okay.
Forced technology transfer,
Yeah.
and their data policies, cybersecurity, all that.
Those were all problems before.
Big problems. And remember the Phase 1 deal?
Yeah.
China never really followed through on a lot of it.
So there's a trust issue.
Definitely.
And what about China? Do they even want a deal?
The feeling in Beijing seems to be, it's nice to have, but not essential.
They're playing hardball.
They are. They've been through this before. They know the game.
And they don't want to look weak.
No. Losing face is a big deal in China.
Especially for their leaders.
Absolutely.
We can't forget about the security side of all this either.
No, that's a big part of it.
What happens if this trade war spills over into actual conflict?
It's a real concern. You've got China building up its military.
Right.
The U.S. is strengthening alliances in the region.
With places like Japan and Australia.
Yeah, they're working on shipbuilding together.
So it's all connected.
Very connected. Some in the U.S. even think we need to confront China directly.
Even if it means economic pain.
Yeah, they see it as the only way to deal with the long-term threat.
So to sum it all up,
It's complicated.
it's a huge mess. We've got tariffs flying back and forth, the potential for a global recession.
Inflation could be a big problem, too.
Right, and it's all tied up in this geopolitical rivalry between the U.S. and China.
A rivalry that's not going away anytime soon.
And a trade deal doesn't seem likely.
Not a comprehensive one anyway.
And then you've got the security dimension with the risk of military conflict always looming in the background.
It's a lot to keep track of.
It is. But that's what we do here at The Deep Dive.
You break it down.
Give you the insights you need. But this is just a snapshot.
Of April 2025.
Yeah, things are changing all the time.
You gotta stay informed.
So, here's something for you to think about. What are the most important things to watch?
In the coming months.
Yeah, to really understand where this is all going.
What are the key indicators?
And what about those unintended consequences?
It's stuff no one's seen coming.
Yeah, because there's always something, right?
Always.
So, stay informed, stay curious,
Keep asking questions
and we'll see you next time on The Deep Dive
for another deep dive.
into something else you need to know about.
See you then.